Hello and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Monday, December 21st, 2020, and I'm pre-recording this Trading Places Live for Tuesday, December 22nd. Futures currently are slightly lower after a day of pretty heavy volatility on Monday. Market was all over the place, and I'll show you an intraday chart in a bit to kind of emphasize that. Want to go through the agenda today. I'm going to go through the daily market recap, and we got talking technically, where I'll show you an intraday chart of the S&P 500, go through the VIX and some of the sector ETFs, and also a couple of other ETFs. And I really want to focus today on accumulation distribution. So I've got literally a segment where I want to bring up some individual charts that I think look very interesting when we look at the accumulation distribution. Then we'll get into the earnings spotlight. We do have a few companies that will be reporting over the next couple of days. Couple in particular that reported either after the bell today or will be reporting in the morning before the bell on Tuesday. So got a few of those that we want to take a look at. And then we're going to get into the three you must see. Got three stocks for you there. I think that all of these are kind of interesting for different reasons, but stick around. I think you'll enjoy that. Before we get into any of that, I do want to just let you know, if you go over to earningsbeats.com, you can sign up for our free Earnings Beats Digest newsletter. All it takes is name, email address, hit that subscribe button. No credit card required. You can unsubscribe at any time. It is published 3 times a week. I write those, and it's usually a quick 1 or 2 paragraph kind of thing with a chart showing relative strength, earnings, something along those lines, but generally pretty informative and educational. We do have a lot of folks that have joined our community, and it's just one way for us to give back. So again, name, email address, hit that subscribe button. You can unsubscribe at any time. If you'd like to try our service, check out these portfolios. We do a lot of research over at Earnings Beats, and these portfolios are derived from that research. But you can see the numbers are just fantastic, especially if you focus in on the performance since inception of each of our portfolios, and also this quarter, looking at the results this quarter versus the S&P 500 this quarter. And when we say this quarter, it's not calendar quarter. We have a draft 4 times a year on February 19th, May 19th, August 19th, and November 19th. So usually right at the end of earnings season, we want to get through all the earnings reports, go through, check out the ones we really like the best, see how the market is reacting, see what their relative strength looks like, and then we fill out our portfolios for the next 90 days. And then we go through the entire process over again. But I think if you go through and you look at these numbers, it's pretty astounding how we've done. So if you'd like to check out our service, we'd love to have you. You can join today, 30-day trial, cost you $7, but we'll refund you the $7. So it's literally a no-cost trial for 30 days. Love to have you. All right, let's go ahead and take a look at the action from Monday, because it was a wild day. You know, we started off the day, we had the news from the UK that there's a new strain of the COVID virus, which appears to spread more rapidly. There's no evidence at this point that it's any more fatal or that it might hold up versus the vaccine any better. In other words, experts still believe that the vaccine will work against it, but still it startled the market. There were a number of countries that announced travel bans with the UK because of the fast spreading mutation of this virus. And so that had the market on the defensive right at the opening bell. But like so many times in 2020, the headlines got the selling going at the beginning of the day, but throughout the day and into the close, we saw plenty of buying. Dow Jones Industrial Average finished up 37 points. Futures were over 500 points down, yet we finished up 37 points. The S&P 500 lost 14, but it was down a lot more than that intraday. NASDAQ, same thing, down 13 points, but it also was down a lot more intraday. Mid caps finished down just a little less than 0.25%, and you can see small caps down about 1/3 of 1%. So not great when you just look at the final numbers, but if you were watching the market early on and throughout the day, this was a pretty good day for the bulls to come rallying back like that. Financials up 1.35% today. We haven't really talked about financials being on top of the sector leaderboard very often, but we are seeing that. I think that's a good sign. We'll see whether or not we can continue to hold above that rising 20-day. But if we can, and the XLF can break out with a little gusto above 29, that would be bullish. I do like the fact that this AD line is starting to move higher with this action. You can see before when we were going sideways, each time we came up to an equal high, notice what was going on with the AD. I think there was distribution taking place, but that seems to be changing now, and that's good. Real estate, on the other hand, pulling back, having a rough day, worst performing sector today, and check out the AD line going the opposite way. So I think we have to be really careful there. Energy fell back below the 20-day. I was been warning about this a little bit. I'd be a little careful in the near term with energy. The PPO was rolling over. We had a negative divergence on this high here. And so we lost the 20-day. I wouldn't be surprised to see a trip back down to about 35, maybe 36, and then we'll see what happens from there. Energy long-term remains a significant underperformer. So don't want to get too carried away in the short term. It's always nice to see it moving up. We want to see wide participation in any secular bull market advance, but long term, this is still not a very healthy group on a relative basis. Footwear, really nice day. This is one of my favorite groups in the market. I think this is a strong breakout. We did get above 2,600 intraday, came back down, finished below it, but we're still moving up to new highs, which is nice. Autos, which have been on fire, actually took a little bit of a break on Monday, falling about 5.5%. Tesla, which was added to the S&P 500, took a little bit of a hit today, and that certainly had a big impact on the autos as they underperformed all the other industry groups on Monday. 10-year Treasury yield. Check this out. It looked like at the beginning, a lot of money rotating towards the defensive treasuries. That sent the yield down to 0.90 on the open. By the close, though, we were back to 0.94. So the money that was going into the treasuries at the beginning of the day, that reversed, and we saw money coming out of treasuries throughout the day, closing back up closer to the upper end of this range and still holding on to that rising 20-day EMA. So the 10-year treasury yield still looks pretty good to me. On Tuesday, we've got a few economic reports. We're going to get the final estimate of the Q3 GDP. It's expected to come in at 33.1%. That was exactly the second quarter reading, 33.1%. So barring some sort of a big surprise, I don't think that'll have much of an impact. December consumer confidence expected to rise from November's 96.1 level to the estimate in December of 97.0. So a slight rise there. And then finally, November existing home sales will be due out at 10 a.m. October, 6.85 million units. That's expected to drop back to 6.72 million units. All right, let's move on to talking technically. The first thing I want to do, I want to show you this volatility. So here's the S&P 500. This is a 5-day chart. So this is one day, here's another second day, third day, fourth day, and then, of course, today. So Friday looked like things were getting pretty weak. And then we had a nice rally last 20 minutes or so on Friday. Well, that was gone by the opening bell, and you can see the first 40 minutes today, very, very weak. So we had dropped from over 37.10 all the way down to about 36. So I can tell you 36.36 was the low. Pretty big drop there. But look at this rally right back up 4 hours. We rallied from 36.36 all the way back up almost to the break-even point. There was a lot of accumulation taking place throughout much of today. Pulled back a little bit, starting at around 2:30 Eastern. But once again, strong finish, just like on Friday. Had a nice strong finish with heavy volume into the close. So it's hard to really take this market down right now. And if we look at this from a daily perspective, I think this is important because the S&P 500, look at this, moved down below the 20-day intraday, came right back up and held it. I think that's bullish. Until we get a close below the 20-day and we start to at least show some sort of a continuing trend to the downside, I pretty much look at this as, we're in an uptrend and I expect new highs. And so until we start to see that reverse and get these closes below the 20-day, I would remain on the bullish side. Another thing today, when you look at the sector performance, and this is one thing I mentioned to our members in the daily market report late in the day. You know, when you are worried about the market or you think the market might go down, one of the things you would want to do is move out of aggressive sectors and move into more defensive. I mean, if there's going to be leadership at the top on a poor day, you would think it would be defensive groups. But instead, when you're looking for defensive groups, here's real estate, here's utilities, here's consumer staples, and there's healthcare, all on the bottom half of the leaderboard. Top half, we've got communication services, industrials, technology, and financials. Those were the four of the five that held up the best on Monday. That's typically not what we see if we're going to correct. So I don't know. It seemed to me like the money was rotating out of defensive areas and into aggressive areas. We saw it with the Treasury market, and we saw it with our various sectors, the sector ETFs. So I'm pretty bullish with what's been going on. I remain bullish. Could we pull back? Of course, you can always pull back. But I don't see anything on the horizon that suggests that we should be expecting a major sell-off. And unlike back in late February and early March, we kind of got caught off, you know, by surprise by the virus. I don't think the virus is catching anyone by surprise. I think that a lot of the virus, even with the new strain, I think a lot of this is priced in. I think the market is looking beyond it, looking out to the spring. And so I just don't think the virus is going to have any kind of a major impact unless something comes out that really the market's not expecting. Like if this strain were to all of a sudden, you know, have a fatality rate that's twice as high, or if it wasn't treatable, or if the vaccine didn't work against it. Yeah, those are a couple of things that would set us back, and I think the market would probably take a hit. But there's no evidence of that, and I certainly wouldn't be expecting that. Let's wait until we get that type of news before we would want to consider that as far as how we trade the market. So let me pull up some of these sectors. I want you to talk, or I want to talk a little bit. I've got a segment on accumulation distribution I'm going to go into in a minute. But just as part of this talking technically, I just want to show you, you know, back when real estate coming off the bottom in March and we started setting these highs, you can see that AD line was continuing to go up even throughout summer as we were going sideways. The real estate accumulation distribution line was going higher. But as we've gone sideways the last 4 months, it's actually been deteriorating. And our AD line is down near about a 6-month low right now, 6-7 month low. So that's a little concerning when you compare it to some of the others. But there are still some other ETFs, sector ETFs, that don't look very good. Now, I'm a fan of industrials, but industrials have some work to do, because as we were going up August, September, October, notice the AD line was coming down. And then now as we're rallying in the XLI, we really haven't been rallying, although we have, you know, just the last few days started to move back up. I want to see that continue. Then we've got materials. Now, if we look at materials, kind of the same thing as real estate. Last 4 months or so, we've been going down, even though in materials, we've been setting new highs. Not exactly what we want to see. Consumer staples. Not too far from the high, but still we're off of our high last 4 months. We've broken out, and we're really not confirming that to the upside. So these are 4 of the sector ETFs that are giving me a little bit of heartburn as far as the AD line. But let's look at some of them that are much stronger. How about technology? Now, technology set a high in September with this price high. The AD line's already broken out. Now, price action just broke out as well. This is what you want to see, though. I think technology, when it was, you know, going up and down here and consolidating, AD line pretty much held that prior low. But now that we're breaking out, there goes the AD to the upside as well. That's good confirmation in my view. XLC, how about communication services? Sideways consolidation, really not much at all to the downside during that consolidation period. Hardly any downside to the AD line. And then we actually broke out before price action broke out. We didn't break out in price until late November. Earlier, mid-November probably, is when we saw the XLC AD line break out. One more sector ETF. We showed you consumer staples, which wasn't that bad still down from 4 months ago, but look at consumer discretionary. Here, prices have gone up higher, and look at the AD line, also going up higher, setting new highs. So I like the way the aggressive groups are set up better than some of the other areas, with one exception being industrials. And I expect that's going to improve, but I'd like to see that. That would certainly give us more confirmation there. A couple of ETFs that we own in our model ETF portfolio, I wanted to bring those up and show you what's going on here. Look at the online retail ETF, iBuy, one of our favorite areas. This is a group, I think this is our most heavily weighted ETF that we have in our model portfolio. I think there are 8 of them, 8 ETFs. This is the only one I think that's weighted as high as 20%. But look at the action. It's been awesome. Look at the AD line. Even when we've pulled back a couple of times, the AD line's barely budged to the downside. I think there's still a lot of buying of these, not just this ETF, but many of the stocks in the ETF. And then check out renewable energy. This is the Invesco Wilder Hill Clean Energy ETF, another one that's in our model portfolio, model ETF portfolio. But check this out. Look at that AD line. I mean, this is really solid confirmation of what's been taking place in terms of price action. All right, moving on, accumulation distribution. So I want to go through some individual stocks because our AD, I'll go back over here. We have a strong AD portfolio. Check this portfolio out. We just started it 7 months ago. It's up 77% in 7 months. It's up 16% just in the last 2 months. And look at it compared to the S&P 500. S&P's been pretty solid since May 19th, but the AD portfolio is just killing it. And I want to give you a little bit of insight into what we look at when we're looking for stocks for that portfolio. Now, Adobe is not in that portfolio, but as you look, you can see the AD line was here. And as we've been consolidating, Adobe is actually at its 52-week high on the AD line. So I think it's just a matter of time before we get the breakout on Adobe. I think it's being accumulated while folks are getting frustrated because it's not following the S&P and it's underperforming some of its peers. I think there are some selling going on, but I think the accumulation is there. And so I expect we're going to get the next breakout on Adobe. AIMC. This is Altra Holdings. But again, look at the AD breaking out with price. That's what you want to see. And still, even with a little consolidation here in December, we're still up near that high. I think that's good. Copart, CPRT. Look at the rebound here. So we got to a high. We did a little consolidation. I think maybe we're going to be putting in a rest of a cup. Nice bounce there off the 20-day. But AD line strengthening again. So I think Copart looks pretty good. EVOP. This is EVO Payments. Stock hasn't broken out yet, but look at the AD line going to town here to the upside. So I think there's some accumulation taking place in a stock like this. If it gets through 30, that's going to be a major breakout on the stock. So any kind of a test of the 20-day would seem like a pretty good entry point. Now, I do want to say I am not a registered investment advisor. So any positions you decide to take, make sure you're comfortable with them and that you consult with your own financial person, consultant, whatever. But I'm just saying this from an educational perspective. Genmark Diagnostics, GNMK. The stock's been going down for the last 5 months. AD line, you'd never know it. And it's starting to turn back up here. So this is a stock I think is very interesting at this point. Another one, HubSpot. This is actually a stock I own, but I love this breakout on the AD here along with the price action. Breaking up off of this 20-day moving average. I really liked it on the 20-day, and we've certainly had a nice breakout here. NVIDIA. Now, NVIDIA hasn't been a great performer. It actually is in our strong AD. I believe it's in our strong AD. It's in one of our portfolios. I think it's the strong AD. But check out the AD line. Even though we've been struggling here for the last few months, sideways consolidating, and today, look at the AD line break to its highest level in about the last 2.5 months. And the reason it did that is with today's volume, we traded as low as 518.70, but we closed almost on the high today. So it's a poster child really of what we saw back, and look at back in March when the stock was getting hit. You see all those hollow candles? That sends the AD line up. Price down, AD up. That's telling us there's accumulation that appears to be taking place. And look what happened afterwards. So today was another perfect example. You get the gap down, seems really horrible at the open, and then the stock closes near its high of the day, and we see that AD line go up, even though the stock was only up $2, 0.4%. Not a huge day, but that AD line is moving. Let's see, how about we'll do another couple here. This is Pegasystems, PEGA. Sideways consolidating, haven't been able to break out yet, but look at that AD line. It's sitting right there ready. I think it's holding up very well and would not be surprised to see that breakout coming here. PayPal. Now, PayPal, during these periods of consolidation, I mean, we kept putting in higher lows on the AD line. And really right in here, as we were trying to make this breakout above the double top, the AD line made the breakout easily. And look at that AD, very, very strong. I think PayPal continues to look like a great stock here. QDell, this one's kind of like Genmark Diagnostics. They're both medical diagnostic companies. But off of this high, you can see it's had some big moves down. But notice here with the heavy volume, we traded down into the 130s. Stock came all the way back up, closed near the high. That's what drives the AD line higher, even though it went down. If you looked at the OBV on this stock, the OBV would have gone way down. I think it's a good sign when you get a stock that gaps down heavy volume, but closes near the high of the day. And then you can see it came back up. We had another one of these days. But again, we came way up off the low on heavy volume, and the AD line went higher. I think if this stock gets back up above that 50-day moving average, I think we could be in for a run on QDell. Spotify, SPOT, making the breakout early December. So did the AD line. And as we were drifting lower and lower, I think the AD line held up very well. And that's what you want to look for. Stocks that are consolidating, AD line remains strong. And when you get that price breakout, it's really good to see that AD line break out with it. SurveyMonkey, I think this one's setting up really nicely. AD line just set a new high about a week ago. Look at today, we gapped down, finished back up near the high of the day, got a little pop in the AD. But this is one that I think we're going to eventually see the price, and maybe we already have, maybe this is the start of the uptrend. We are above the 20, which is crossed above the 50. Watch that 20-day. If we bounce off of it, keep moving higher, a breakout above 26 would be very bullish. TTGT, this is Tech Target. Hasn't broken out yet, but look at the AD line. AD line's already at a new high. So many of these days finishing near the high, each of the last 5 days on some pretty good volume. That helped bring us right back from this one bad day that we had back on December 14th. TXG, this is an interesting chart here. First of all, go back to March. Look at all these hollow candles. So the stock was going down, kept going lower and lower, and the AD line was starting to surge to the upside. And then look what happened. Stock went from 50 to 170 after all of that accumulation was taking place. Now we've pulled back. It's just going sideways, but watch, AD line starting to turn up. If we get a breakout and the AD line goes up with it, this is one I certainly want to keep an eye on. All right, just two more here. WSC, Will Scott Corp. AD line broke out back here and actually broke out in late October, early November. Price had not broken out. AD line did. And we saw price follow suit after that. So I thought that one looked good. And then finally, Zoom. I think Zoom is almost like the poster child as well. Talked about NVIDIA earlier. But during March, when we did pull back, we were seeing recovery. We didn't really even get much of a pullback on Zoom, not like many stocks. But when we did pull back a little, look at the AD line going up. Next high, it was going up again. Next high, it's going up even further, kept going higher. Now we've been pulling back, but I'm seeing just about equal lows, but the AD lows are going higher again. This one gapped up today, came back down, finished toward the low end. So we actually got hit a little bit on the AD line, but I would be watching that AD line and watch to see whether or not, when we came back down, we closed below the 20-day, 412.92. So I thought we were going to clear it today and hold it, but we didn't. I would be watching for that though. If we take out today's high at some, at whatever point down the road, that 427.76, I think that would be a really good short-term signal. All right, moving on to the earnings spotlight. Wanted to bring up HEI, which reported after the bell on Monday. They reported their bottom line 45 cents. Market was expecting 43 cents. Stock was up 1.16% after hours, so not a lot, but it has been in a nice uptrend. AD line's been weak, but when you look across, it's been pretty decent versus aerospace, because aerospace had been horrible. It started to show some life here since the vaccine news came out. It's been showing some life, but this has been a decent stock in that space. What you're looking for is a breakout above about 138. Two stocks that'll be reporting on Tuesday morning. And I think in my show yesterday over at Earnings Beats, I may have said this one, Cintas, was going to be reporting after the bell, but it actually is before the bell. I still, when you look at it, I think it was holding up pretty well. When it set its high back in November, it was at a 52-week high relative to its peers. As it's been consolidating, it's lost a little bit of its luster, relative luster anyway. But I wouldn't give up on the stock. I think this one still looks pretty decent. Be interesting to see how they report tomorrow. Their estimate's $2.18. And then CarMax also in the morning. The AD line has not been good. We've got to get through this gap resistance right at about the level where we are right now. In fact, let me see where we might be there. 100.10 was that gap down. Here we failed to get through. That's 99.79, and then 100.46. So today we were able to get just fractionally above that gap resistance. And now we've got earnings coming out in the morning. It's going to be a really interesting morning here to see how it does. CarMax relative to specialty retailers has not been particularly strong. So based on that, that always makes me nervous going into an earnings report. All right, let's go ahead into the three you must see, and then we'll wrap up the show here. First, I'm going to pull up AIV, which is Apartment Investment and Management Company. So we're talking in a real estate area. We had a huge gap up. Stock ran all the way up to $6.50 intraday, but that big black candle on heavy volume normally tells me the selling isn't over in the near term, and it wasn't. We came all the way down, filled this gap, got to the 20-day, and it looks to me like we're starting to turn back up. I think this one's got a shot to run back up to about 550, 560, maybe 570. And from 484, that would be pretty impressive. To the downside, just keep watching that 20-day and gap support. GPN, this is Global Payments. AD line, not good. Failed breakout. Look at the high back in February. 210 is kind of a big deal. We got up to 210, 209 and change, couldn't get through. Shooting star candle off of this latest uptrend. I think we're going to go back and fill the gap, test that 20-day, and then we'll go from there. And then the last one is Tyler Technologies, TYL. AD line has been strengthening, which I like. We did print a dark cloud cover candle right here on the top. That's a reversing candle off this uptrend. Sure enough, 3 days in a row now we've been down. I want to see if we hold right here around 420. I'm going to say 430. I'd like to see this stock turn at 430, possibly put in a reversing candle on the 20-day. That could signal the worst is behind us, so watch for that. All right, thanks all for tuning in, and I'll be back on Wednesday over at earningsbeats.com for my next Trading Places Live. Hope to see you there. Take care and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.